Hello everyone, welcome back to All Financial Discussion channel. For this video, I like to concentrate on CPF interest rate. So this video, firstly, I will explain why CPF interest rate could be our biggest wealth builder for our retirement plan in Singapore. So this will be the first objective. Next, I will illustrate with example how we can actually compute our CPF interest rate before age 55 and also after age 55. So this will be the second objective of this video. This diagram here shows our interest rate from two tiers. One is before age 55, while the other will be after age 55. When we are actually before the age of 55, we still have this SA account. While we approach 55 years old, SA account will be closed and automatically we will be given another new account, which is RA account. Let's take a look on the interest, the base interest, which means that the lowest possible interest by OA, SA, MA, and also RA. So from here, you can see that our OA, in fact, has the lowest interest with 2.5% per annum, while for SA, MA, and RA, they have the same base interest of 4% per annum. So I will come to this additional interest rate for CPF later on. But over here, this is what we are actually guaranteed. Okay, in the year of 2026, we have the base interest 2.5% for OA, while the rest of the account, we are actually guaranteed a base interest of 4% per annum. You probably wonder who or maybe what actually determine our CPF interest rate. Let's come to the OA first. Okay, so our OA interest is in fact based on the average 3-month interest that is actually offered by our major local banks such as DBS, OCBC, and UOB. At this moment, since the bank deposit rate has been in fact much lower as compared to 2.5%, while we have this minimum floor of 2.5%, therefore our OA account remain at 2.5%. Keep this in mind, this is in fact reviewed every quarterly. While our SA and MA and also RA, they are actually depend on the 12-month average yield of 10 years Singapore Government Securities. Okay, so basically with this, they actually add another addition of 1%. And also, okay, they do not want this number to fall below 4%. So therefore, okay, at this moment, we are actually at 4% because our Singapore Government Yield Security is in fact lower than this 4%. And also, I like to highlight that this is also reviewed every quarterly. A lot of us, in fact, has this wrong concept. Okay, basically, we thought that we get 4% of CPF interest every year. So this is actually wrong. Okay, because CPF, in fact, compute our interest rate in a monthly basis. Let me explain how they actually do this. Okay, so they actually count our interest rate every month based on the lowest balance for that month. Let's say in the month of January. Okay, so basically our lowest balance, okay, that will be used to compute our interest rate. So basically with the compute of interest rate for January, okay, basically they will accumulate the rest of the month, like February, March, etc., and then they will credit our interest at the end of the year. I guess because of this, majority of us actually thought that CPF in fact credit our interest every year. So this is actually the misconception of interest rate. In order to fully understand how to compute the interest rate, let me give you an example. Okay, so suppose okay, we actually has this monthly salary of 5K and the total CPF contribution by both the employee and also the employer is 1.85K. Let's say that the employer and employee actually contribute the CPF on 15th of January. So therefore, our OA account balance at the start of January is, let's say, 20K. And let's assume the OA interest rate is 2.5% per year. Let me show you how they compute the interest rate for this month, January. From this example, you can see that an extra contribution actually arrived on 15th of January. However, okay, this 1.85K don't earn any interest in the month of January. Why? Okay, because CPF in fact used the lowest balance for January, and for this case here, which is 20K. So hence, this 1.85 will not earn any form of interest in the month of January. How to compute the interest for January? Okay, so basically this will be the amount in the OA. OA actually earn an interest of 2.5%. Okay, so basically we compute in a monthly basis. So this is how we compute our interest rate in the January by the contribution of 20K in the OA account. So basically this is how we compute our interest rate in a monthly basis for January for this case here. Let's do this some so-called imagination in order to fully understand this CPF interest rate. So this is what I have calculated earlier on. Okay, if you still remember, this 1.85 won't earn any interest for January, but they will earn interest in the February. So from here you can see that the OA account will have additional of 1.85K. And therefore, from the additional of 1.85K, you can see that the interest rate earn is actually much more as compared to the January. And this thing go on and on. So this is how we compute our interest rate in a monthly basis. Now, let me explain the extra CPF interest. Okay, so in fact, many of us actually will get confused of this additional CPF interest. Let's just focus for members that is actually below age 55. So let's say if you are below age 55, in fact, you will be able to earn extra 1% on the first 60K of your combined CPF balance. However, with a condition, okay, only up to 20K of OA can actually count towards this calculation. Let me give you an example in order for you to understand this better. Suppose OA 20K, SA 40K, MA 30K. So our total CPF account will have 90K. However, if you still remember, okay, only the first 60K will be able to enjoy the additional 1%. So not all the amount of this 90K will have this additional 1%. Only the first 60K will qualify. And keep this in mind, we have another addition condition is OA need to be kept at 20K. So let's compute the eligible balance. For this case here, since the OA has this maximum, okay, just nice 20K, so basically this will be the maximum cap by the condition. While the rest of the money can be at SA 40K. If you still remember, only the first 60K will enjoy this additional 1%. So from here, you can see that these are just 60K. So from here, we can earn an extra interest of 1%. This can be quite attractive. By the additional 1%, this simply means that we are able to earn another addition $600 per year. Okay, this can be very attractive with compound interest. After 10 years, this is even more attractive. Let me do a quick conclusion based on the effective return for both OA and SA with this additional 1%. So for this case here, the first 20K, instead of 2.5%, okay, we actually earn a 3.5% per annum for this OA, the first 20K. While for this case here, you can see that SA will earn 5% rather than 4% with the additional of 1%. So from here, we can conclude that the additional so-called interest will be $600 per year, which is quite substantial. A quick disclaimer, this is not a financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you're willing to lose. With this, we are ready to kickstart today's discussion. But before that, I'd like to urge you guys to help me by like this video. Guys, if you have learned something from this video, urge you to help me by like this video. Guys, it's free. Help me. Press the like button now. For those who are new to this channel, and if you want to support me, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. Now, let me focus on member above 55 years old. Okay, so basically the bonus can become even more generous. So from here, you can see that additional 2% and also additional 1%. Okay, so let me explain this. In fact, you will receive an extra 2% on the first 30K of your combined CPF balance. And again, with the condition that OA actually kept at 20K. And the next 1%, okay, on the next 30K of your combined CPF balance. So this means that the first 60K of your CPF will enjoy this additional interest. Let me give you an example in order for you to understand this better. Suppose in your CPF after age 55, you have OA 20K, RA 180K, and MA 30K. Okay, so basically you add up all these accounts, total you have this CPF balance of 230K. So basically the interest will be calculated as following. If you still remember, OA is always kept at 20K, okay, for the extra interest. Okay, so the rest will be allocated to the RA or MA. Okay, so basically this is how the allocation rule will be. The first 30K, okay, we have this base rate plus 2%, and the condition is only 20K from the OA will be able to enjoy this. Next will be the next 30K, they will have the additional of 1%, while the rest will have the base rate only. For this case here, total is 230K, and only 60K will have this additional interest of 2% or 1%. So therefore, okay, the remaining 170K will only able to enjoy the base rate, while the rest 60K will enjoy either the 2% or 1%. Let me further illustrate on the next slide. Let me explain in deep detail so that you know exactly how to compute your CPF interest rate. So for this case here, only the first 20K in your OA will be able to enjoy the additional 2%. So basically for this first 20K in the OA, they will earn 4.5%. Okay, basically the base will be 2.5 additional. So therefore, total this first 20K will earn an interest rate of 4.5%. Next, if you still remember, only 30K will be able to enjoy 2%. What we left over will be just the 10K in the RA account, which will enable us to earn 6% rather than 4%, an additional of 2%. While the next 30K, okay, we cannot lump in the OA anymore. We can only lump in the RA or MA. For this case here, since we have surplus in the RA, the next 30K in the RA will earn additional of 1%. So instead of 4%, it will be 5% for this case here. While the remaining RA and MA, they will enjoy their normal base interest, which is 4%. Let's come to the monthly calculation. As I emphasized earlier on, CPF calculate our interest in a monthly basis rather than end of the year. And they also use the lowest balance throughout the whole month. And then they will credit our interest at the end of the year. Let's come to this example. Okay, so for example, if your RA account has 200K throughout the whole January, okay, so the first 30K will earn 6%, okay, additional of 2%. And if you compute in a money basis, basically we will use this 6% divided by 12, which is 0.5% for the month of January. While the next 30%, okay, basically they will earn additional of 1%. So basically this is how we compute again for a monthly basis. Basically we take 5% divided by 12, this will be roughly equals to 0.4167% for the month of January. While the remaining 140K, for this case here, they will earn 4% divided by 12, okay, which is 0.333% for the month of January. So basically for the interest for January, okay, the first 30K, okay, they will earn 150. How to get this number will be 0.5% multiplied by 30, which is 150K. While the next 30K, okay, basically they will earn a interest of 0.4167%. And if you take this 0.4167 multiplied by 30K, you will get this roughly 125. So this will be the interest for the first 30K, 150. The next 30K will be 125. This will be the additional so-called interest of 2%. This will be the additional of the interest of 1%. And the remaining will have the base interest of 4%, which is 466.67. So if you add up all this interest at the month of January, you will have this total 741.67 interest that you earn in the January. Okay, so basically this will accumulate, and again they will credit at the end of the year. So this is how CPF actually compute our interest rate. Let's come to the conclusion. The OA will earn 2.5%, which is the base interest. The MA and RA, they will earn a higher interest of 4%. And in fact, this will be the floor rate in 2026. The interest for CPF, they will compute in a monthly basis rather than yearly. And in fact, they will only credit this at the end of the year. The interest compound because the future interest is earned on the previous interest. The member under 55, in fact, they will receive an additional 1% on the first 60K of their combined CPF balance. But keep this in mind, a cap of 20K for the OA. While the members age 55 and above, they will receive even higher bonus on the first 60K, as I illustrate earlier on. Okay, basically the first 30K will have additional of 2%, okay, but the OA again kept at 20K, while the next 30K will have additional of 1%. Okay, so this bonus rates simply means that part of our CPF can in fact earn additional like 3.5%, 5%, or even 6%, okay, depending on the account and also your age. With this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.